Final 120 minutes of what has been an action-packed week, the first full 5-day week after two truncated ones, and we head into another truncated one. You're watching Mid-Cap Radar from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Patakia. With me is Manglam Malu, and well, some recovery from the lows, Manglam, and the bulls, they're finding some support at lower levels at 23,850, so it's almost a 200-point recovery from the lows.
It's an important recovery. You know, what we'll talk about is the day one of any series start. The low or a high of that day is very crucial. We started lower, and from the lows we've recovered. That's telling you that there is some support, and as we speak, the level at which the Nifty is right now is the 200-day moving average. While we were at halftime report, we were talking about the potential of a recovery, and that being led by IT, and that's exactly what has taken place. If you look at Infosys, if you look at TCS, the IT index itself. But all of that for in just a bit. We'll talk about all of that on Mid-Cap Radar. First up, all the top stories. The indices, they see a mild recovery from day's low, even as India-Pakistan tensions rise following the terrorist attack in Pahalgam. Pharma, realty and healthcare are the big losers, with mid-caps bearing the brunt. IT sectors buck the trend.
Fourth quarter numbers have dragged shares of SBI cards lower. Credit costs remain elevated. Quarterly spends have surged both sequentially and on a year-on-year basis. The receivables per card also have declined.
L&T Tech Services under pressure after fourth quarter numbers missed street estimates. Company tells CNBC-TV18 that anticipated better revenue growth in the quarter, but macros created unexpected headwinds. They expect FY26 to be a better year than FY25.
Emphasis is one of the few IT names that are bucking the trend after the numbers were a beat on expectations. They've reported the highest sequential growth in the past 3 years. Total contract value is also the highest in the last 7 quarters.
Cyient slips after fourth quarter revenue and margins miss estimates. The company also provides no guidance estimate for FY26, citing uncertainties in the near term. Welcome back. As we were talking about the recovery in the market, just look at the intraday chart of Infosys and TCS. Infosys and TCS, both of them actually this week have rallied about 5%. The Nifty is around the 200-day moving average. Closing above that would be extremely important for the bulls, and we've seen a near 200-point recovery from the lows itself. From the broader markets as well, there are a bunch of stocks which are recovering. Most notable of them is Coforge, which has recovered about 4% from the lows, currently at the high point of trade. We're also seeing some traction in names like Chola Invest, which is up around 2% from the lows itself, now in the green. But a bunch of stocks are moving around. Hormuz, my co-anchor, has moved across to the wall to take us through all those mid-caps that are moving around. Hormuz.
The recovery from the lows is what is going to be prominent in all the charts that we just see. But we will start off with the losers from the broader markets, as that is currently still the color despite the recovery from the lows. Garden Reach is now down around 6%. ACC, an earnings reaction. Earnings came during market hours yesterday, but it's down 6%. Sirma, SJS2 and Blue Star is now down 13% so far this week. Profit booking continuing in this stock. There are earnings reactions plenty. We are counting down to earnings from a lot of the larger names, but SBI cards, as we just mentioned a few minutes earlier, look at the recovery in Cyient, look at the recovery in LTTS, and look at the recovery in Emphasis. Emphasis now, in fact, is now up at the highest point of the day, 3% higher on that stock as well. Real estate as a pocket has not done well today, but that too is seeing a fair bit of recovery from the lows. Look at Anantras. There was a price target cut from Nomura yesterday on the stock, is down 5%. Obera Realty and DLF2 among the losers on the index, where every stock is still in the red. Stocks that are doing well on the back of strong volumes in today's session. These are a few that are bucking the trend. IEX, of course, an earnings reaction, but GIC is off the lows. Nava is off the lows, and both of them are recovering on strong volumes. And lastly, some other names that are still in the green despite a wobbly broader market. Naveen Fluorine is one of them, 3% higher, while Motilal Oswal is down almost 6.5–7% ahead of results. Nuvama Wealth is doing well for itself at 3.5% higher, and Persistent Systems, of course, another mid-cap IT name that has been fairly resilient in what has been a weak broader market so far. Manglam.
Take that point entirely, and since you're talking about gainers, I'll just put the spotlight on Restaurant Brands Asia. This is, remember, the company that operates Burger King in India and also in Indonesia. Big up move is what we're seeing on the stock. In this hour itself, it's seen a big spike. So put up the intraday chart of Restaurant Brands Asia, and you would see that it's at the high point of trade with a fair amount of volumes as well. And it's not just today. In fact, this week itself, the stock has now turned positive after today's gain. In the month of, April, so far, the stock is up 36%. So there's definitely something brewing out here in Burger King or Restaurant Brands Asia. Maybe some of the fund purchase or, perhaps an HNI investment that is taking place here. We just watch out for that. The price tells you that. I remember, talking about the quick service restaurant space on Editors Roundtable, saying that maybe it's out of the woods. And Restaurant Brands Asia is actually among the top-rated stocks when it came to upsides as far as the brokers are concerned. Obviously, we had Sapphire Foods, which was showing the maximum amount of upside given the valuation discount that it trades with as compared to Devyani. But now we have, Restaurant Brands Asia, which has moved to the high point of trade. But good time to bring in Vinay Rajani of HDFC Securities for a quick technical check in the market. Vinay, after a near 2,500 point recovery from the lows in April series, we started on the back foot and that dip has been bought into. Do you think this purchase or recovery from the lows is a lot more durable and that's the texture of the market going forward? See a dip, go ahead, buy it?
Yeah, good afternoon. I think that it is durable, and whatever fall we have seen in the intraday, it is more like a correction in the overall bullish trend. So we have seen a 2600 points rally from the lower level, and today it has come down. It has retraced a bit around 23.6% retracement, and the previous swing high was placed around 23,800, 23,870. So previous resistance, we were expecting it to act as a support. So from that level only, it has started recovering. So it is more like a correction in the overall bullish trend. We are continuing our bullish stance on the market, and we feel that dip should be bought into. And overall, we feel that Nifty should reach a target of 24,800 in the coming weeks. So positionally, we are bullish. This is just a correction in overall bullish trend, and dip should be bought into. The stop loss in the long position that we are suggesting is around 23,700. So with that stop loss, one can continue to remain long, and overall positional trend is looking quite strong.
All right, and individual stocks, what do you like here?
Yeah, so IT stocks have been performing very well. So Coforge is the stock which is looking very strong to me, and it has remained resilient in the falling times of IT stocks. So Coforge is one of the strongest IT stock. So 7430 should be the entry level, 7290 is the stop loss, and 7650 should be the target. The second pick, I would take it from the FMCG, that is Patanjali Foods. For last two trading session, it has been recovering from the intraday lows, and primary trend has been positive. So 1960 is the level around which one can go long as a trading. 1900 should be the stop loss. On the upside, 2050 should be the target.
All right, Vinay, thank you so much for sparing time and joining us today with your views on the index and on specific stocks as well. By the way, now we are heading towards 24,100 now on the Nifty, almost 225 points higher from the lows of the day. So bulls getting some buying interest at lower levels. SBI Cards, though, still remains at the lows of the day, 6% down. ACC is down 6%. Scient 2 down almost 6%. But what's recovering among the leading Nifty names is, of course, Infosys and TCS, as Mangalam just highlighted. IndusInd Bank too is currently in the green, and what has now moved into the green is Reliance Industries. That too has recovered from the lows of the day ahead of the results announcement, and that too is showing up on the recovery on the Nifty. But take a short break. Just before we do that, some good news for our viewers. Here is India's business news leader, which is now just a click away, which is the CNBC-TV18 all-new app, where you get in-depth news, financial world updates, breaking news, all of it just at your fingertips. You can download the app from the Apple Store, the Google Play Store, or even scan the QR code that just comes up on your screen. Take a short break. Back on the other side.
We're speaking about, the truncated week next week and also going into the weekend. Pull up Global Spirits reports its numbers shortly. Among the first earlier, companies to report their numbers, Global Spirits has actually spiked about 5% from the lows, currently at the high point, moving higher. Let's talk about the mid-cap IT stocks. Since we're talking about recovery in the large-cap IT stocks, the mid-cap IT stocks post their fourth quarter earnings. We had companies like Persistent and Emphasis that beat street estimates, and those stocks are doing well. On the other hand, L&T Tech Services and Scient, which were a miss, have actually seen a decline, though they're recovering from the lows currently, but results weren't very good. Rima joins in to tell us how mid-cap IT fared in Q4 FY25 so far.
Yeah, there's been a flurry of, mid-cap IT earnings. But if you had to summarize, you could say that the strong are getting stronger and the weak are disappointing. So when you mean by strong, we're talking about companies like Persistent, Mphasis, and Coforge is still awaited. But these are the companies which have positively surprised the street despite the tough macro, while companies like Cyient, LTTS, which have had a few rough quarters and the stocks have underperformed, have disappointed the street. Now, onto the numbers. This time, Persistent, Coforge and LTTS reported a positive revenue growth. But the beat came in from Persistent, 4.5% versus estimates of 3.8%, and Mphasis was also slightly ahead of street expectation. LTIM, LTTS, Cyient missed the mark on the top line. For LTTS, the numbers look good, like you see a 10.5% revenue growth, but that includes the IntelliSwift acquisition. The estimates were actually for a 13% growth, which is why L&T Technology Services, despite the double-digit top-line growth, is actually a miss. Now let's quickly get to the guidance. Now, Persistent maintains its FY27 annual guidance of $2 billion, $5 billion by FY31. They're also on track to improve margins by 200 basis points, and they're also hopeful of outperformance. Mphasis is guiding for above industry growth rate. LTTS is saying that FY26 should be better than FY25. They're looking at a double-digit growth rate, but some people on the street were hoping for a stronger guidance. So, their own internal estimates were that LTTS would do a high double-digit kind of a growth given the acquisition. So, in that context, just a double-digit has disappointed the street. And Cyient is the one, where the guidance is actually the most dismal. Firstly, there is no revenue guidance. They expect the uncertainties to last for the first half of the year, and even the margin aspiration has been lowered and pushed further down. Now they're looking at a 15% margin over the next 2 years.
Divergent trends in the mid-cap IT earnings, the good ones doing well, being rewarded, while the bad ones getting smashed in today's session. But IEX is holding steady off the highs of the day after a mixed quarter, but still holding on to some bit of gains. The revenues were below expectations. The profits too were in line with what the street was expecting. Vinny is here to tell us more on the numbers and also what the management told us. Vinny.
Absolutely. So it was a mixed set of numbers that came in from the company. Like you mentioned, revenue below estimates. Motilal Oswal said that this is mainly due to the lower per unit transaction fee. Now, profits that came in line with the estimates. So profits saw a growth of around 21%. On the other side, we saw margins, EBITDA margins, see a contraction of around 93 basis points. Now, what the management has highlighted and what is important is in terms of volumes for IEX, because that's the key, as well as in terms of market coupling and regulations that come in. So in terms of volumes, the company's highlighted that, the electricity volumes have grown by 19% in FY25, and certificate volumes have grown by 100% in FY25. Other than that, they expect this 18-19% growth to continue in FY26 as well. They saw a 100% jump in terms of their IGX volumes in Q4, and they expect this to continue in terms of momentum. So good volumes on that front is what they're expecting as well. The company highlighted that there's a lot of inventory and they expect the prices to remain stable. And because of the stable pricing, they are saying that this could give them some bit of a headroom to grow further. So that is something interesting to watch out for. IEX managing to hold on to gains of 1.4% as of now.
Absolutely. Take that point. Decent results. Management commentary was fairly good, and as a result of which we've seen the stock move or hold on to the gains despite the wobbly moves that we're seeing in the broader markets. In fact, the number of stocks which are advancing have now moved higher from 270 to about 305, though the number of stocks which are declining are still close to around 2293 itself. Take a short break, come back, get you more on the markets, a lot of stock-specific action. Stay tuned to Mid-Cap Radar.
Welcome back. The markets are taking a bit of a sigh of relief after Donald Trump hit a pause in tariffs and on markets globally, and they are starting to come to terms with the reciprocal tariffs. So what is the roadmap from here? Our colleague Prashant Nair caught up with experts from Nomura to discuss what is next for the markets, and began by asking Rob Subaraman, who is the head of global macro research, as to when can we see the finalization of these trade deals. Listen into excerpts of that conversation.
I don't think they'll be done quickly. I think trade deals take a very long time to do. Okay. I think the Trump administration will try to dress up some quick wins with some close allies and hopefully try to get some tariffs down. But You know, our view is that once tariffs go up a lot, and they have gone up a lot, we think the effective rate's 21%. They don't tend to come down that quickly. And so our baseline is tariffs are going to stay up pretty high. I think China has quite a bit of leverage over the US, and that trade tension will continue. And ultimately, Trump wants tariffs for revenue as well. So, you know, tariffs are going to have a big macro effect on the US economy and economies everywhere this year is our bottom line.
So with China, we've been hearing what we've been hearing over the last 48 hours. Should we read this as a bit sort of conciliatory, tempering things down a little bit? Or is that reading into too much? I mean, things could change. We could hear something different over the coming days. What's your sense?
Well, look, right now, US tariff on China of 145%. I mean, essentially for a lot of trade between US and China, it's essentially stopped.
Correct.
So there will probably be some coming down. But the point I'd make is...
So between 10 and 145, there's
a big range, right? So...
And Trump was, before election, said 60%. So will we get down to 60? What, I mean...
We could get down to 60. And that has been our kind of a longer-term baseline, around 60. But the point we'd make is that's still extremely high. And that is going to lead to a lot of, I think particularly for the US, a lot of inflationary effects. And is going to hurt growth. Rest of the world, it's a different impact. It's more of a demand shock for the rest of the world, lower growth and less inflation. So there's going to be also a disconnect between central bank responses. We think the Fed is not going to be cutting rates quickly because of the inflation. We have the first cut in December. But for other central banks around the world, there's a lot of room for cutting rates.
You're saying that foreigners, and especially central banks, are selling US bonds. I mean, that has been happening, Japanese especially.
So we haven't seen it in terms of central banks.
Okay.
The data is actually
So maybe investors,
mixed.
etc.
It's actually quite mixed. But you know, you have on one hand the Treasury data, which shows you there's some direct selling from Europe. There's some direct selling that's coming from, let's say, China, Asia, ex-Japan as well. But then you have the safe haven, or the tax haven, should I say, places where you have seen actually buying. So it's a bit of offset. There's no consistency really about it on the central bank space. But certainly on the private side, it looks like something is happening there on the actual asset unwind.
I think that's the interesting thing. I think the central banks around the world have been diversifying away from US dollars, their reserves, for a long time. The new interesting thing is the private sector. Private institutional investors, big lifers, pension funds around the world, are they starting to diversify away from the US?
And the reaction, what we saw was interesting, right? Usually when stocks go down, I mean, bonds go up. But here you had a situation recently when everything was getting sold.
Yeah, long end US Treasuries, equities were being, it was basically almost get out of the US.
So that phrase US exceptionalism, yeah, are we at the end of it? What's your sense?
I mean, I wouldn't push it that far away at the end. I would certainly be saying that it's fading, right? That the evidence we're seeing is that it's fading. But at the end is still quite, you know, I think of a push. It's a push to say that.
Sonal, let's come to India. It seems like we're first in line to get a deal. Would you agree?
Hopefully. I think we definitely have a head start. We started the negotiations ahead. The terms of reference have been finalized. India is a strategic ally. Now, you know, deals take time. Agriculture is a politically sensitive subject for us, but there are other aspects of the agreement on the industrial tariff, parts of the non-tariff barrier, you know, buying more of US products, which can easily be done. So I think if we can get the 26% reciprocal tariff down before the deadline, and our tariffs are lower than our competitors, then really in this world, what you're looking for is a relative advantage. And I think
will we have that relative advantage, Sonal? Because others also will negotiate, right? Others will also, I mean, for example, competitors in various industries like Vietnam, Cambodia, I mean, they'll also want to sort of lower tariffs, their respective tariffs, right? So it's all relative, as you said.
So I think most Asian countries are trying to negotiate with the US. The question is whether what they are offering will be acceptable to the US. One part of the deal is buying more of US products, but for countries like Vietnam, Cambodia, transshipment of China products has been an important reason for the reciprocal tariffs also these other aspects of, non-tariff barriers or whatever we want to call them. So, and right now we are seeing China trying to, also talk to Southeast Asian countries. It's putting Southeast Asia in a more difficult position in terms of choosing between US and China. I think for India, it's a lot more clear-cut. We don't have that transshipment problem. And therefore, I do think, relative to a number of our competitors, we do have an upper hand.
How long before we see a deal? I mean, do you have a number in mind? How many days? How many months? With India, US?
No, I think the definition of deal is important. The trade negotiations run into years.
Yeah.
It's a deal on goods, it's a deal on services. This is going to take time.
But this is like the COVID emergency. We got the vaccine. COVID hit in Feb. We got the vaccine in November.
The early tranche on some bits you could probably agree on by the 90-day, but the first tranche, of course, we are planning by September or October. The big deal, the real deal, is going to run into years.
It could be a MOU in the coming months.
The actual order will take time.
All right, so that was an interesting conversation. Meanwhile, we had numbers coming in from Chennai Petro at the bottom of your screen. Quarter on quarter, big jump is what we've seen in the revenue. But if you look at the bottom line, it's an even bigger jump from 10 crores. The numbers have jumped all the way up to 400 plus crores on the profitability front. And that's reflected in the EBITDA as well. From 241 crores, it's up to over 500, 600 crores. Actually, if I read it correctly, over 700 crores. And that's exactly what the stock is, doing as well, or denoting after those numbers. It's up at the high point of trade. What's also at the high point of trade is the market at large. From today's low, there has been a recovery of over 200 points, 250 points, 270 points, as our team tells us right now, over 24,114. So firmly above the 200-day moving average as we speak. The Bank Nifty is also recovered from the lows, as is the mid-cap index, where we now have gains or cuts of sub 1,000 points on the mid-cap index. It's the IT pack which has led from the front, but don't lose sight of Reliance as well. Ahead of numbers today, Reliance is the big boy, which is slowly but steadily waking up. The intraday chart of Reliance comes up for you, currently fairly in the green. Take a short break. Come back on the other side. All your stock and investment-related queries on Your Stocks.